With me here, another Davos regular, Manish Kejriwal of Kedaara Capital. Manish, good to talk to you here in Davos. When we spoke last year, you were very pessimistic, at least about India. Has pessimism given way to optimism?
Good to see you, Shweta. It's good being here. This is Davos number 10, so we're quite excited to be here. I would say, to your question, absolutely. I think the pendulum has swung probably way too much on the other direction. I think people are a lot more optimistic about India. Obviously, the foreigners are. Lots more money is coming in. There's hope for more companies to come in. But more importantly, I think people within India have hope, whether it's the economy, whether it's politics. People seem to have a positive spirit about them. Now, I always say, I hope the pendulums haven't swung too much on the other side.
Okay.
And we can talk about that later, but let's hope the markets haven't overcorrected and become too positive.
I have to talk to you about that. You know, we've seen equity markets at lifetime highs. Share with us your thoughts on whether there's worry about the Indian markets overheating and the impact that we could see later. Is this a trend, the kind of momentum we're seeing in the Indian equity market, something that can be sustained?
You know, I think the Indian markets tend to always swing extremely on both sides, like a pendulum, as I've said. Things in India were never as bad as people made it out to be when the markets had crashed down to the 8,000 levels. This is the Sensex I'm talking about. I think we have the positive story on the ground as yet in terms of sales, consumer sales, to reflect the current valuations. Having said that, foreign markets, foreign investors are probably today overexposed and overweight on India. And frankly, amongst the emerging markets, there is no other story. So I think what you're going to see the next 1 year or so is in the last 2 years, the foreign funds, the money have already come in, that is reflected in the current valuations. I don't think you're going to have a huge amount of foreign FII sort of money because most of the foreign investors are already overweight in India. I think the story will still remain in an uptick for two things to happen. One, the local earnings of companies which are all doing and hopefully doing well pick up, and then the earnings increase, and then the PEs then come down, and then more money comes in to then get the PEs back to what there are. So earnings have to improve. Secondly, we still haven't seen huge amounts of domestic equity flows coming into the markets.
Right.
So I think the story for the equity markets for the next year or so is dependent, one, most importantly, on domestic companies' earnings increasing, and obviously the investment coming back to where they should be. And then number two, the domestic investors really investing in the equity markets.
Manish, one thing clearly that has bolstered the India story in many ways has been the collapse in oil prices, which was the big dominant theme in 2014, continues in 2015. That's something that's clearly helped the India story in many ways because, you know, it's something that directly benefits India. Do you see that really playing out? How will it play out in terms of real investments, in terms of equity markets, in terms of the deficits of India?
So listen, the price of oil, I'm glad you didn't ask me the price of oil, what's going to happen, because whoever tells you they know what's going to happen to the price of oil have got it wrong. No one predicted, very few people predicted that oil would be sub $50, which is where we have it. It is an absolute boon for India. You couldn't have had a better fall or winter or Christmas gift for Narendra Modi and the current government and for all of us. Three things happen when oil falls for India. One, independently, the twin deficits, the current account deficit falls dramatically because the oil bill is a massive contributor to the current account deficit. So that decreases. When the current account deficit decreases, the other big thing what the government has done is essentially not passed on all the oil savings to the consumers, and they've actually increased taxes.
Right.
And they've increased taxes.
Is that a sensible move according to you?
That, I think, is a very sensible move because in addition to the current account deficit, they're also addressing the fiscal deficit.
But politically, they're getting some flack for it, saying that, you know, you're not passing it on to consumers. This is, deregulation in many ways is a farce because at the end of the day, petrol and diesel are deregulated commodities. So not passing on the entire thing to consumers, at least from the government's point of view, you think makes sense for the fisc?
Well, I think there's no right or wrong answer to this. I personally believe this government knows exactly what it's doing, and I would support what they've done. Because you don't want to get the consumers overexposed once again with the volatility of the oil prices. It could happen 6 months later that the price of oil jumps up to 80 or 90 again. I don't think it'll happen, but frankly, nobody knows. If that was to happen, hopefully, what the government will do will ratchet down the taxes on oil and they won't have the retail prices swing up all the way again. So back to your question, current account deficit decrease, fiscal deficit decrease, and leading to all that is obviously then a decrease in the inflation rates,
Absolutely.
which frankly is what allowed Mr. Rajan, the governor, to actually decrease the rates in an unexpected fashion. Now, it's not a huge amount, but the
sentiment point of view
is fantastic. And there's an expectation that that's going to continue for at least 75 or 100 basis points, because I do think what really needs to change in India is the investment cycle hasn't kicked in again.
Right.
And I think till the interest rates fall, there is sort of a holding back. And that holding back has to change. And I think this cut will give that incremental confidence, which has then resulted in the massive swing in the equity markets.
Disinflation, perhaps another dominant theme at the forum this year, because that's a worry for many economies around the world. The oil price crash, what's happening to Russia. Share with us what are some of the key takeaways you're hoping to get here at the forum this year, some of the broad, dominant global themes.
Well, I think there are many things which the forum should be focused on this year. And if you look at the program, many of these are well covered. I think preeminent amongst all these is probably the whole situation. I think the 3 or 4 things are going to happen. One, while you speak of inflation, remember some countries have the opposite problem.
Right.
We have Japan, where actually the drop in oil prices will result in a lower level of inflation or greater deflation than they're ready for. So it's ironic that Japan, like India, is a huge importer of oil, but they're trying to increase the inflation rate, unlike India, and the fall in oil prices actually decreases that thing going up. I think the second area that people are going to worry about is quantitative easing.
Right.
You know, there's been an expectation of that for a long time now, but it hasn't happened. I think if you see that happen in the US this year, and there's a really good session on Thursday or Friday morning with Christine Lagarde, Gary Cohn from Goldman, Ray Dalio, and a few others talking about exactly this subject. So that should be interesting. I think the whole unrest in the whole Russia-Ukraine situation is another area which is going to be discussed. And then, frankly, the underlying tensions with the ISIS, the Islamic situation in the Middle East, what happened in Yemen yesterday, what's happened in Paris last week. I think that's an underlying theme which, while there aren't enough topics in the forum for the discussion, but I think that'll naturally happen in the private discussions. I think oil also is one. In the governor's meeting for the energy industry, there's going to be a lot of coverage on this one. So I think these 4 or 5 themes will be tackled. I think the other area will be BRICS, what's going on.
Absolutely.
I mean, we can talk about that, but frankly, when you see BRICS, it's the first time, I think the last 2 or 3 years, one was wondering where India should actually be in the BRICS or not. Today, I think India is one of the countries which is holding up the concept of BRICS.
Should the others be in BRICS or not is the question now. The others are simply not holding up, and in many ways BRICS as a concept is beginning to fall apart now.
That is true. So there are a couple of sessions on that. I think Russia is facing its own macro problems given the collapse in oil prices, given the way the Western economies have put the sort of restrictions that they have on the Russian economy. It's had a massive effect, and you'll see that. I think if you look at Brazil, and China, similarly, very different. China is gone, I think last year, despite growing at about 7.5%, it's the slowest rate of growth in the last 25 years, or the last 20 years.
And both IMF and the World Bank actually saying that wait until 2016 and India's growth rate will be better than China's. Do you buy that argument?
You know, I don't think that's a relevant question. I think people always get too hyped in the India-China comparison.
But why not? Why not? I mean, that would make India the fastest growing large economy in the world. I mean, in terms of growth rates, if we achieve 7%, if China slows down to 6.9, it's a big global headline.
Now, I know it's a headline, but I think again, not to put a dowser in all this, but I really think the India story is a marathon. It's not a sprint. I don't, there were times when we put these big buses in Davos which says India shining. Yeah, we've got to take victory and growth in our stride. And it's, we've got to see this over a 20-year period. If we break through and have an acceleration for 1 or 2 years, and let's say we defeat the Chinese rate of growth, it doesn't matter. As far as for the next 20 years, we grow at a 7.5% rate of growth, I think it's a great news for the country, for its people, for our companies, and for entrepreneurs. But what happens with China, I think it's not that whether we're faster or less faster than China is also a very important growth engine. So actually, it's in India's best interest if China also grows as fast as possible. So in my mind, the competitive thing is always good to have, but the competitive nature should urge us to go faster. We shouldn't worry or hope that China goes slow, because a slower China also means a slower growth.
Okay. Yeah. You've talked about the India-China comparison. I'd like to talk to you about the China-America comparison, because that's another story that always plays out in Davos or globally. Is America in many ways back in the driver's seat when we talk about global growth? Is that a trend that we're seeing, or do you think China will still remain the most important driver of global growth? Which one of the two, according to you, is really driving growth right now?
I actually think both. Both these are critical economies, right. And there's no taking that away. We've got in China a country which has 1.5 billion people, rapid growth, facing some problems, but under the current leadership of President Xi, a lot of focus on anti-graft, a lot of focus on getting corruption out, a lot of focus on correcting the excessive lending by the banks, especially in the real estate sector. So there will be a subtle slowdown. The U.S. has been a fantastic economy throughout its history. It has a habit of re-energizing itself. The financial crisis was 6 or 7 years ago. People have forgotten about that.
Right.
From the biggest story in the U.S. right now is from being the world's largest energy and oil importer. It is in a situation today, because of shale gas and oil sands, it can actually be exporting oil in the next few years. So the U.S., the increase in productivity that it has witnessed because of the fall of energy, and now leading to really a rapid reindustrialization, is a fantastic story.
But in that many ways has also become the basis of the kind of geopolitical wars that we are seeing. Oil prices collapsing, OPEC not cutting output. So while it's fantastic that America is now producing oil instead of just being one of the top importers of oil, it also has an impact on the overall geopolitical way in which the whole oil story for the world is playing out.
No, of course, and that will be the case, I think. But I think the oil story and the oil and OPEC is a very complex situation. It's not just the U.S. You also have the Russians. You also have the African. You have Nigeria. You have South America. You have Norway. So I think who knows what's going to happen to the price of oil. But I think as a country, the U.S. is in a situation it's never been better. It's not just the oil and industrial, and you also have the valley where you continue to have significant advances in technology and then the internet in terms of entrepreneurship. So I think going forward, again, it's not an India-China-like comparison. Again, the U.S. economy and the Chinese economy are in one hand very different. One is very manufacturing intensive. The other was historically more services intensive, banking intensive, which is the U.S. But the beauty of the situation now is they're getting the competitive back in manufacturing. So actually you'll see one of the other trends is probably a lot of manufacturing moving back to the U.S. as the country gets more and more competitive and as the price of energy falls dramatically.
Okay, you talked about quantitative easing, and that's again going to be one of the big themes here, because on one hand you've got America winding down its stimulus, you're talking about the Fed's action. On the other hand, Europe's talking about stimulating the economy. So in many ways confusing signals when we look at the global economy, but does Europe really need that stimulus right now, given that recovery hasn't been as expected?
You know, it's a very tough question, and I think even when people take Europe as one picture, it gets confusing. Europe is complex, and you have a couple of countries which have far exceeded Germany historically, have far exceeded the average European growth rates. You've had Italy, Greece, which have had its own sense of purposes. You've had Spain, which has been a problem. You've had the Icelandic issue, which has blown over. So I don't think there's one solution for all of Europe. And the recent moves by the Swiss bank, the central bank last week, prove that, right? There can't be one story, because you can't coordinate 25 different countries and all this thing. So I think the story in Europe will remain confused. I don't think there's a clear story out of there. I don't think you're going to have a positive answer like you have for the US and India for right now. And unless there's some significant changes in the social structure, in an increase in competitive dynamics, in things like productivity, I don't think the European story will be as positive as you see the American and the Indian story.
All right, Manish, it's always a pleasure to talk to you, and we're going to, of course, see what are some of the big themes coming out of here. For now, the view coming from Manish Kejriwal out there is that as far as India goes, the pendulum seems to have swung too much in one direction, even with regard to the Indian equity markets. There is a positive story out there, but a lot more needs to be done on the ground to see it translating into actual investments, both from domestic as well as foreign investors. With camera person Arif Radhu, this is
I'd like
Shweta.
to add there,
Okay.
sorry to
No,
interrupt you,
Manish, that's
is
fine.
while we haven't seen changes happening as yet on the bottom line in terms of companies, what you are seeing is the right steps being taken by the government, and it's a matter of time for it's karma. The right work is being done. The efforts and the fruits will come in a couple of months.
All right.
Or not a year.
All right. So the karma is there, and we'll have to see the fruits of it. Of course, we're going to see how the finance minister also hard sells that India story here to the 2,500 delegates who have gathered here, movers and shakers from the world who are here at the World Economic Forum meeting. With camera person Arif Radhu, Shweta Rajpal Kohli reporting from Davos for NDTV.